Imagine you're walking into a store where every product is on discount, but here's the twist: you're allowed to buy and sell those products over time, and your goal is to walk out with the maximum possible profit. That's exactly how stock trading with discounts works, and today we're going to break it down step by step in the simplest possible way. This video is designed for absolute beginners, but we'll go super deep so by the end, you'll not only understand the concept, you'll be able to apply it confidently, whether you're learning trading logic or preparing for coding problems like LeetCode 3562. This is Stock Predictor, so let's think like smart investors and logical problem solvers at the same time. First, let's understand the core idea. In the stock market, prices move every day. Sometimes stocks trade at a discount compared to their previous price or future potential. A discount in trading logic usually means you are allowed to buy a stock at a reduced price, or you receive a benefit that lowers your effective cost. The entire game of trading is very simple at its heart: buy low, sell high. But maximizing profit is where strategy, discipline, and logic come in. Now think of this problem from a logical perspective, similar to how problems are structured on LeetCode. You're given a series of stock prices over time. Each price represents the value of a stock on a given day. You are allowed to perform transactions, meaning you can buy and sell, but there are rules. Sometimes you can only hold one stock at a time. Sometimes there's a discount applied when you buy. Sometimes you can make unlimited transactions. The challenge is to calculate the maximum profit possible while following all the rules. Let's slow down and visualize this. Imagine the prices are like this over several days. Day 1 the price is high, day 2 it drops, day 3 it rises again, day 4 drops even more, and day 5 explodes upward. A beginner often panics here. They might buy too early, sell too late, or miss the best opportunity completely. A smart trader waits for confirmation, understands discounts, and plans exits in advance. Now introduce the discount concept. A discount means that when you buy the stock, you don't pay the full listed price. Maybe you get a fixed amount off, or maybe a percentage. In logical trading problems, this discount is often abstract, but the idea is powerful. It's like having a coupon in the stock market. If a stock is priced at 100 and you have a discount of 20, your effective buying price is 80. That instantly increases your potential profit if you sell higher later. So how do we maximize profit with this rule? We need to think in states. This is where beginner traders and beginner coders usually struggle, but don't worry, we'll make it intuitive. At any given time, you are in one of two situations. Either you are holding a stock, or you are not holding a stock. That's it. Every decision flows from this simple truth. If you are not holding a stock, you have two choices. You can do nothing and stay out of the market, or you can buy the stock today. If there is a discount, your cost is reduced, making buying more attractive. If you are holding a stock, you again have two choices. You can hold it and wait for a better price, or you can sell it today and lock in profit. The key to maximum profit is choosing the best option at every step while thinking about the future, not just today. Beginners often focus only on today's price. Professionals think in probabilities and trends. Logical problem solvers think in transitions between states. Let's walk through a realistic example. Suppose prices over 5 days are 50, 40, 60, 30, 80, and there is a discount of 10 whenever you buy. On day 1, the price is 50. With the discount, your effective cost would be 40. Is it worth buying? Maybe, but you don't know the future yet. On day 2, the price is 40, discounted to 30. That's even better. Buying here gives you a much stronger position. On day 3, the price jumps to 60. If you bought at 30, your profit would be 30. That's a solid trade. On day 4, the price crashes to 30, discounted to 20. This is a massive opportunity. On day 5, the price jumps to 80. Buying at 20 and selling at 80 gives you a profit of 60. This is how discounts amplify profits if used correctly. Now let's talk about mistakes beginners make. One big mistake is overtrading. Just because you can trade doesn't mean you should. Another mistake is ignoring the discount logic and treating every price the same. The discount changes your risk-reward calculation. A discounted buy lowers your downside risk and increases your upside potential. That's why professional traders love pullbacks, dips, and discounts. From a strategy perspective, Maximum profit comes from patience and timing. You wait for the best discounted entry and sell when the market offers you a premium. From a logic perspective, maximum profit comes from always choosing the better of two options, holding or acting, based on future outcomes. Another important concept is opportunity cost. If you are holding a stock, you cannot use that money to buy another discounted opportunity unless you sell. That's why sometimes selling early is actually the smarter move, even if the price might go higher later. Locking in profit frees up capital for better discounted entries. Now let's connect this to real trading psychology. When prices fall, fear dominates. People sell in panic. That's exactly when discounts appear. When prices rise, greed dominates. People buy late. That's when smart traders sell. Maximum profit is not about predicting the future perfectly. It's about reacting logically to price movements and discounts. If you think about this as a beginner, your main job is not to be right all the time. Your job is to protect capital and let profits run. Discounts help with capital protection because they lower your entry price. Selling into strength helps profits run because you exit when demand is high. Now imagine scaling this logic over hundreds of days. You're constantly evaluating, should I buy at this discounted price, or should I wait? Should I sell now, or should I hold longer? This is exactly how algorithmic trading systems think. They don't use emotions. They use rules. And those rules are built around maximizing profit under constraints. Let's also talk about risk. No strategy guarantees profit. Even discounted stocks can go lower. That's why position sizing and stop-loss thinking matters. In logical problems, risk is often ignored, but in real trading, it's everything. A discount gives you an edge, not certainty. Another powerful idea is compounding. When you consistently capture profits from discounted trades and reinvest them, your capital grows faster. Small, repeated wins add up. That's why many successful traders focus on consistency, not home runs. Now let's bring it all together. Maximum profit from trading stocks with discounts comes down to a few core principles. Understand the rules. Identify discounted opportunities. Enter with discipline. Exit with logic. Repeat consistently. Whether you are solving a coding challenge or trading real money, the mindset is the same. For beginners, the biggest takeaway is simplicity. You don't need dozens of indicators. You don't need insider information. You need a clear plan. Buy when the effective price is low because of discounts. Sell when the price offers a strong margin above your cost. Track your decisions. Learn from mistakes. If you're using this knowledge for learning problems like LeetCode style challenges, focus on state thinking. Always ask, am I holding or not holding? What choice gives me the maximum future profit? If you're using this knowledge for actual stock trading, focus on patience and discipline. Discounts come to those who wait. This is how professionals think. This is how algorithms think. And this is how you, as a beginner, can start thinking today. If this breakdown helped you understand how to maximize profit from trading stocks with discounts, you're already ahead of most people. Stay logical, stay disciplined, and remember, the market rewards preparation, not emotion. This is Stock Predictor, and this is how smart money thinks.